What's up, guys? Hope everyone is doing well. In this video, I'm going to be going over some updates for Bitcoin. I'll then go over the SPX, then switch into the total market value, and then after going over Ethereum, XYO, and JASMY. The first chart here is this 4-hour chart for Bitcoin. You can see the symmetrical triangle that I have been talking about within the last video and what I mentioned in the community tab posts recently. We can see these 5, 1, 2, 3, 4, 5, these main touches. We just recently, this recent drawdown that I mentioned yesterday, so far we're finding support. We've gotten some type of a bounce. Whether or not this is going to sustain up to the upside, and we'll see a breakout of this pattern, validating this as a bullish pattern. We'll have to see. There's also the 200. We can see right here how important this has been so far. Found support not only on the support of the pattern, but along the 200 EMA right here as well. And then right here we found support, but then got rejected below it. So getting back above that, which currently sits at around 67,000. The 50 EMA also sits at around 67 to 68,000. It's going to be fairly important. And as I mentioned the other day, 70,000 also is very important to see strength above. Now, what I want to pay attention to here is the RSI. If we look here at the RSI right here in this range, which constitutes most of this pattern up here, this triangle, we can see that throughout this trading of this pattern, it's been more oversold than it was going all the way back to around 40,000 towards the end, about the last week of January, which I find very compelling to, again, just further instantiate the idea that Bitcoin doesn't have too much downside to see here, although instead recently it still could totally see 30 to 40% drop, being a healthy retracement during a bull market. We took a look down here at the MACD. It's also clearly more oversold and going all the way back to, or not oversold, but lower than even going back to around 38.7 thousand of, again, really the last week of January. If we take a look here at the RVI as well, it also seems like it's been building up. The price you can see from right here, from around 66,000 down to this recent local low at around approximately 63,000. The RVI has been building up here during that time. So again, we could also, if we're going to find some support right here and continue to break up, it could be some hinting towards some type of smaller time frame bullish divergence on this volatility indicator. Moving into this 12-hour chart, which is what I've been mainly focusing on recently with the community tab updates. As I mentioned yesterday, we could see a similar fake out as we did up here with the upside to the fake out to the upside. So far we've come down and we closed above it, but now we've moved back into it. So for example, let's say we had this kind of double top. Let's say we do something like this, we make a double bottom outside of it and then we break it back up and continue to go up. We have this kind of dual fake out to really kind of shake up both sides of the aisles, bulls and the bears, keeping people on their feet. But as I've been saying a lot recently, totally could come down around 56, 57, 58,000, then around 50, 51, 52, 53,000, and then around approximately 42 to 44,000 worst case scenario, which roughly is lining up with the 200 EMA right here, and then worst case scenario the 800 EMA. And really these indicators are still basically looking the same as they did when I said what I said yesterday, just kind of oscillating around the medians, not really showing any bias, kind of really just sitting neutral until something actually, we see some volatility towards the upside of the downside here. Moving into this daily chart, we see this ascending, broadening channel that I've been updating for quite some time at this point. The main thing that I want to show in this chart is this MACD that I showed last time right here around January 24th. I was pointing out how, as you can see clearly on this MACD, going back to mid-November of 2022, which is where the approximately 15.4 thousand bottom was. We see right here when the MACD reached this zone, this was representing the bear market bottom, things continue towards the upside. And then right here, 11th of March, we see the same thing. The MACD is reaching this zone, a local low, great local low to buy, and then things went up to 30,000. Bitcoin continued to go sideways, set in another top at 30,000, continued to get rejected. Then we come to 21st of August, we're setting another local low right here, which acts as a local bottom. We then continued to slowly build up until we finally broke 30,000, leading into October of last year. Let me just fast forward all the way to right here, again, most recently. On the 23rd, 24th of January of this year, we saw the MACD reach the same area. And now we go forward to current time. We can see that we are heading into that. The MACD is just entering it recently. We could continue to go a little bit lower. It's definitely possible. For example, as I mentioned recently, we could, seeing the daily chart, they're coming down. They've already closed below the daily version of the symmetrical triangle. So again, like I said, it could continue to be a fake out. Let's say the bottom side fake out, the downside is already ended, and we continue to build up here and continue to go higher towards the broad range of around 90 to 130,000 that I've been talking about recently. Or we could continue to come lower and hit the bottom, what has been support outside of this fake out we got that I was talking about when this happened, saying that it would likely break back into the channel due to a fractal occurrence of this same type of pattern somewhere in this area on about like the 4 to 6 hour. So we could come down to around approximately 60,000, which would line up with more solidly testing the bottom of the 50 EMA band that we can see right here. Then again, I have a 41% drawdown right here, which would be maximum during a bull market, showing a healthy retracement just to offer Bitcoin some time to cool off and then continue with some strength towards the upside. If you look here at the RSI, it's been tilted towards the downside, where we can clearly see the price has roughly been trading in the side range of approximately 63,000 to approximately 72,000. So we could be seeing some bullish or hidden bullish divergence here, along with seeing the RVI tightening up, the Bollinger Bands compressing, oscillating around its median, along with this MACD being where it is. If you look at the stock RSI, it's also been building up here as well. So we could see, best case scenario, all of this culminate into maybe we go down just a little bit more, but ultimately we don't break the support of this ascending channel, the broadening channel here, and then things will finally continue to go towards the upside. Fast forwarding to higher time frames, here we see the 2 weekly. I have this Fibonacci channel that I've shown various times in the past, just drawn from the candle close high around 50.6 thousand in 2017, candle close low January 21st, around January 2021, or no, my bad, January 2019, 21st, around 3.5 thousand, and then connecting it to the candle close low right here, one of the two candle close lows right here of the recent bear market bottom, sitting at around 16.5 thousand. You can clearly see creates a very nice bottom range that has been respected going all the way back to July, beginning of July 2017 in the prior cycle, phase 2 of the cycle 2. And we can also see the white range, but on the upper side this time, also acting as the highs so far. And according to my theory, the phase cycle theory, the epic theory, we should get something along these lines. It'll be similar to the bull market we saw right here, where this area encircled right here corresponds to this area, and then so far this first impulse corresponds with roughly this right here. So assuming that continues to respect it such it has so far, just taking a little bit longer to play out. Now, with the recent update that I gave to this, I said somewhere within a bubble around August of 26th this year, what is when I think currently we'll see Bitcoin top out somewhere at highest approximately 230,000 is what I think is most reasonable. Now let's say we're looking here at this daily chart, 12 hour, the lower time frames. Let's say we do actually break down further here. We break out of the support of this ascending broadening channel, and we go down to really around 52, 53, or even down to around 43, 42,000. That would coincide with something like this pink pattern. So if that does happen, we do get a more prolonged breakout. Let's say it lasts, roughly a month or less. That could push, assuming we still take a similar parabolic trajectory towards the upside, with this pink pattern taking us towards last month, December of this year, where we'll top out, rather than somewhere around August, which I've said like July, August, September could If we get a more of a prolonged downside here, we don't respect this symmetrical triangle pattern that I've shown, it could push the bull market top, according to my perception and conceptualization, towards, I would say, late November, early to mid-December, just really before the end of this year is where I still think that we'll see. I think we're going to see Bitcoin top out within this year rather than next year. And if things do extend into, for whatever reason, extend into 2025, I will lean towards Bitcoin topping out before the end of Q1 of 2025. So before the end of March of next year at the latest, still respecting roughly the same range. Now, I mean, according to this channel, if the longer it takes, the price range does extend higher, but as I've shown in the past, according to the historical Fibonacci retracement, this is always this green range from 2.186 to 2.32, going back and taking all of the phase cyclical bear markets, as I've done here. This is always the range where Bitcoin tops out at. And with respect to the current phase we're in, which is phase 1 of cycle 3, this coincides with the 2.321, which sits at approximately 223,000, which is why I will round it up to around $230,000 approximate highest, just giving room for some wicks towards the upside. Moving into, well, actually, before I go into that, we zoom out here, we can look here at this bottommost indicator, the money flow index. I'll get rid of this channel for now. We can see that going all the way back in Bitcoin's history, once the money flow index entered this pink range, we had the last parabolic impulse of the first cycle, which is from beginning all the way to June 6th, where it hit around $32. And then we go to around mid-February, we see the same thing right here, where it's entering the pink range as Bitcoin's breaking the prior all-time high of around $30 to $32, around $20 to $32. Continues this first bull market of phase 1 of cycle 2. And then we go to January 16th of 2017. We're seeing the same thing as Bitcoin's breaking the prior all-time high of around approximately $1,000, $1,200, going up to approximately $20,000. We go to the intermediate top, a local high of phase 1 of cycle 3, June, July of 2019, when Bitcoin hit around just approximately 14,000. We can see we got a rejection at that, did not enter the pink range right here. And then heading into December of 2020, January 2021, as Bitcoin's breaking the prior all-time high of 20,000. We see the same thing happening, and we've done that recently. Once Bitcoin was, again, closing above the prior all-time highs, we're entering this pink range. Just another reason to show further validation of the fact that we are and have been in a bull market, and we are most likely going to continue to go higher rather than seeing a more than 40% dump at this point. Now, this is a chart that I've been updating for quite some time. I made this chart somewhere towards December, January, February. I think it was sometime during January of last year. I was saying, according to this, we can see now each of these halvings, we see these white ranges with this black center line, 4 of them, first 3 being halvings that have already taken place, the last one being the upcoming halving, which is likely to happen according to most of the halving countdowns or timers before around April 20th. So not too far away at this point. It's about a week or so away, assuming those are going to be fairly accurate. And we can see, taking out a measurement tool, 72 bars from the first halving, 1001 days, lining up with the final bottom we set right here. The bear market was over. If we do the same thing with the next halving, 72 bars, we can see getting in the exact same scenario. Bear market's over, lows set, things are starting to transition into this bull market right here. From this third halving outwards, we see, again, which is what I was saying, about a month and a half before, February 13th, that the bull run would begin no later than a bubble around that date. It ended up acting out quite nicely. So far, we've continued to sustain a bear to bull market transition. We zoom in here to these boxes, we also see a same moving average trend happening every single time. Each of these boxes, which are 27 bars right here, 27, 29, so those are also basically the same length every single time as well. If we look here at this phase 2 bear market of cycle 2, we see the green moving average. I'll actually, if I can I'll get rid of price. We see the green moving average, which is actually so we're looking at the 5 and 13 EMA, 5 being green, 13 being red. One crossover, crosses back above, the green does, 5, and crosses back below the 13 EMA. This is where this box begins. We only see one crossover right here during the phase 1 bear market of cycle 3, and then we see 2 or 3 right here, similar to the first one I've shown back here. We see 1 cross, 2, and then 3. We see the same thing right here, 1, 2, and then 3, the final one, which then insinuates, it activates the bear market. This one being similar to the very first one as well, with this kind of double top formation. Rather, this time we set a descending, and this time was an ascending with bearish divergence with the most recent highs we've seen. Now, we zoom into this channel. I believe this channel is going to respect, that price within the current cycle 3 that we're in, relating into the final moments of the bull market of phase 1 of cycle 3. Then we'll enter phase 2 of cycle 3, and I believe that the price of the current cycle will respect this channel until the end of the cycle, until the end of the upcoming phase 2, which I think is going to be somewhere within a bubble around 2030. Not more so before 2030, but more so after 2030, pushing 2032, 2033 at latest. I think Bitcoin will be worth around 1 to 1.4 million, somewhere within that range by around approximately 2030. And each of these, look at these trend lines, we can see that what I did was I used these rather than using some sort of Fibonacci channel to show this trend. What I did up here to the top was I took a trend line from the wick high here to the wick high of the most recent all-time high. I suppose the prior all-time high, since we've already set new all-time highs at around 73,000. Then I just columned it, took it down to the candle closes of the bull market high of 2017. Just nicely lines up with the final top of around the candles closing around 62,000 when we wicked up to 60, when Bitcoin went up to 69,000. And then down here towards the lows, this is taking from the wick down here, which is all similar to the Fibonacci channel that I was going over on this chart right here. And we can see that again, like I was saying, it's just respecting this rough range going all the way back to July of 2017. And what I did right here was some more so respect the structure of price rather than showing some Fibonacci structure, using this wick low right here, this wick high to this wick low, and which these bottom trend lines are the same trend lines as these upper trend lines. And I just find it interesting because if you move along it, you can see clearly it acted as a support right here. We dumped back below it, wicked down to the bottom line, came back above, found support up along it up right here, and then continued to go higher. We then dipped into this range right here recently with the most recent bear market low, 15.4 thousand. Broke back above it. Zooming in, we can see that we held support right here with this small bodied candle with these massive wicks of the upside and the downside. Continue to go up. We set this kind of sideways range, double top, found support right here, and ever since then, Bitcoin has just essentially been going straight upwards. And again, just to continue to point it out and continue to reiterate it, the structure of the price, along with the Fibonacci tool retracement that I showed earlier, and also factoring in that this all comes from my phase cycle or epic theory, is also supporting approximately 180,000 to approximately 230,000 by around the end of this year, assuming all this continues to play out nicely as it has so far from around 15.4 thousand. And then moving into this monthly chart here, again, just want to show this. This is similar to the money flow index that I showed. This is the RVI on the monthly chart. We can see each time that this line, this purple line, goes up above into this high range of the volatility. The bull market is really starting to go full steam. See again right here, goes full steam. Right here, 2020, full steam, and then again, we've just recently entered it within the last month and a half. I've entered it as we're breaking again. Usually is lining up with the breaking of each of these all-time highs, going all the way back to 2012. And then we zoom in here. This is roughly, let's say that, again, going back to these lower time frame charts, and we, at the very least, respect this ascending broadening channel. If this continues to be respected, and we don't really see too much of a drawdown here, especially if within the next 15 days, we, again, going back to this, let's say that we've already, met our local low here. Let's say we just even go a little bit lower to about right here, and we can quickly just ramp up here towards the upside and quickly go to around, at least 85, 90, 100,000. We go back to this chart. I mean, this candle currently that I've on it pushes up to around 94, 95,000, which this candle would grow to continue to further meet the this fractal pattern that I've had on here. This again is assuming that the recent update of around a bubble around the end of August will encompass where Bitcoin ends up topping out, heading into the upcoming all-time high. We move in here to the SPX. Now, those of you familiar with my content will know that I still am expecting, according to this long-term trend that I've seen in all of the indices, not just the SPX, but then New York Stock Exchange and NASDAQ, this very long-term trend. Each of these dots right here, 2000, 2007, 2014, 2021, every 7 years we see major dump, major dump. There wasn't really a major one right here in 2014, but you can still see that we had some sort of retracement. Fast forward to 2021, I think we are due, and I think we're due for another dump, and I don't think this small dump from around 44.8 thousand down to 3.5 thousand is what that was it. Especially if you look here, this being the monthly chart, there's a very long term from 1998, going all the way out to where it really, it connects from 1998 to 2018, so 20 years, but going to now, it's going to be around 24, 26, roughly 25, 26 years. We're seeing this, the prices continue to go towards the upside here, but the RSI continues to be oriented more so towards the downside, and then even of more recently, we can see, zooming in here, that we can look at the price. We have this ascending, and then we have a descending right here. And this is the monthly chart. So this is going to, in my opinion, most people would say as well, just have a big emphasis on what the SPX and the general indices are going to do over the medium to long term. And if we look here now, zoom into, I was figuring that this right here was going to be it. So basically what I think we're seeing is a double top. I was thinking right here that this was going to be it. So far it hasn't, but we are still, like I said and shown, getting that bearish divergence. And I still think this long-term trend is going to play out that I've gone over in the past. I'm not really going to go over that in this video, but if we look here and we factor this price action right here as a massive M pattern, you can see, now typically M patterns are looked at as bullish, but this clearly looks like a very nice M, at least I think so. And then it continued to go higher here, finally broke above what was the horizontal resistance, and ever since it's broke above that, if we take the highest price target, which corresponds to this first leg in the M pattern right here, we can see that it puts price up to around 55, approximately 5.5 thousand, which we are nearing, and we may have one more small bump up to that, and then perhaps this is when we will get this major dump that I've been talking about, which I think is going to be at least 57% or more. If we go back and we look at these two right here, the first one was 57, this one's 50, so I think 50 to 50, well, 50, let's say it goes up just a little bit more, 50 to See, 57 is going to take it down around 2.3K. Then 60, 61, 62% would take it down to around approximately 2,000, which again would come down to this area right here, which would be a great area to come down to and find support on as well. And I do think that this, assuming that I'm correct, and the SPX is essentially overdue for a pretty severe drop in price due to, again, the bearish divergence on this higher time frame and the long-term trend that I've gone over in the past, which has to do with these 7-year cycles, which is a pretty commonly known thing within the market. Following this 7-year trend, you can even think about the 7-year cycle, Shemitah cycles within the Judaic tradition, and how they factor that into association with Jubilee years and how that's predicted things in history. But anyways, that's besides the point. Obviously, the number 7 is also just important for various different reasons when it comes to mythology, cultures, and which, you know, then factors into human history as well. But that, well, last thing actually, let's say that I'm wrong about this this major collapse, which I've also talked about with respect to the fact that going back to around 2021, many news outlets saying that a crash is on the horizon, similar to the crash of 2008, and then the M2 money supply for American currencies, printing data that hasn't been seen since the 20s leading into the 30s when the Great Depression happened. So not only are there things in the chart to support this, but there's also real world scenarios and contexts to support this as well. But let's say that all that is wrong. I think there's also good reason to believe, if we look here, this black line, this is a 1974 to 2000. So we're looking at 26 years of a bull market. Now, if that repeats, let's say basically, if I can find the tool down here, essentially this is just a massive ABCD pattern, very symmetrical, massive ABCD pattern that's going to take the SPX, and if I had to assume the other indices as well, up to, I mean, the SPX, for example, this has going up to around 16,000. I don't, again, clearly, I don't lean towards that, but it's definitely a possibility. I mean, or it could also go up to some random value around 8,000 and then crash from there, because, I mean, really, at the end of the day, who knows what is going to happen, and really the market has a mind of its own. Moving into the total market value for the crypto market, excluding Bitcoin and Ethereum. We can see here, looking at the RSI, we're getting right now hidden bullish divergence right here when price, the market, total three market was at around 454 billion. And right now it's sitting at roughly 630 billion. The RSI is lower than it was when I was at around 450 billion. I do think that it won't go below around 500 billion at this point. So we are seeing, I think we'll likely see some hidden bullish divergence play out here. Again, like I said, it's very similar to 2020 as we found support, sideways support along this horizontal line that are synonymous with each other. Then we move up to this area right here in 2020, 2021. So these kind of two tops, sideways action, somewhere they're seeing right here. We're just seeing a more severe and prolonged downside. For example, zooming in right here, this downside that was one candle would be correlative to this, which has so far been, like I said, more severe and longer, taking up 2 candles, which would be 2 weeks. Even if we look down here at the RVI as well, we can see that this total three market value has just been going up, whereas the RVI was going sideways, started to taper off, started to print some exaggerated bearish divergence, and now the RVI is just shy of being as low as the market when it was sitting at approximately 300 billion, but yet it is roughly a little over double that right now. Again, I just think that's clearly another bullish implication, especially factoring in everything that I've gone over for Bitcoin as well. We move in here for Ethereum. I definitely think that, especially if Bitcoin continues to go a little bit lower, a nice spot for Ethereum within this local low. Again, if it continues to go lower, somewhere around approximately 2,500, give or take about $200 or $300. So maybe see some wicks down to around 2,300, maybe even like 2,250, somewhere around. Clearly, a lot of support that can be found right here in this area, which is roughly lining up with the this is massive long-term ascending triangle that has so far played out and hit the target box right here. There's also some vector zones. These are the most viable vector zones rather than going all the way back down to around 1900 or even around 1600. So this makes a lot more sense. Again, we're seeing a very similar situation with RSI. We're also seeing some hidden bullish divergence around the end of January to our current price. We see ascending support. We see descending support here on the RSI. We're seeing basically the same thing on the MACD as well. And the RVI is also rather pushed down towards the downside as well, compared to, like, for example, it's lower than it was when Ethereum was sitting at around approximately 2,000. So especially if we continue to push even lower, we could go back down to around this lowest one right here, around 24 on the RVI. So I do think that this ellipse right here represents a nice area of opportunity to pick up, to slowly, even DCA into Ethereum as we continue Bitcoin and altcoins, Ethereum, Cardano, continue to slide lower if indeed they are, and we haven't already met a local low for Bitcoin. And we continue towards the upside here. But also altcoins could, as Bitcoin, let's say Bitcoin reverses soon, it met its local low recently, altcoins continue to bleed a little bit more as Bitcoin's moving up towards the upside. If you look here at XYO, I think XYO looks really good right now. We can see with this curve linear bear market resistance, broke into it, made a double top, went sideways, eventually broke back above it. We are essentially seeing resistance right here along the 200 EMA. So far we're coming down to the curve linear, which I believe we will flip into resistance. There's also the 50 EMA right here. I mean, we could, maybe go down a little bit more into a little bit, close the candle inside of it. Don't think that's a problem at all. It would roughly just be lining up with finding support along the sideways range, which should, that clearly makes a lot of sense. If we look here at the RSI, you can see that it's as oversold as it was when price was far lower. Down here, almost half, roughly half of what it is right now, just a little bit less. And especially if the RSI continues to go even more, but the price stays above, we'll see some hidden bullish divergence here as well. We look here at the RVI, it's also towards the bottom of the Bollinger Bands. They're not too compressed right now as they were back here as Bitcoin or XYO is meeting this local low at around half a penny. So we could definitely again see some more bleeding towards the downside here. Maybe the Bollinger Bands will compress a little bit more. Maybe we'll see this MACD come down to the 0 point, this median, a little bit more, then find support along there and then bounce as it did last time around. I still think that this range right here of around 2 to 3.5 cents could likely present a range where the price heads into, sits there for a little bit and then continues higher, or it could, as I say, for a lot of altcoins, really anything in general, could blow straight through that. Moving into JASMY here. So far, looks fairly similar to Bitcoin as I mentioned last time I updated it. It's just been going sideways. It's literally just been going sideways, bumping the head of price along the 200 EMA. If I move to the 3-day chart, we can see that the 200 EMA then switches from being resistance to support. So on the 3-day chart, if you're using this indicator, the trader's reality main indicator, or any indicator that includes a 200 estimated moving average, 3 and 4 day represent a range for these moving averages that are encompassing the sideways price action right now. This 50 EMA you can see has been clearly important. Finally broke it as we were leading out of this bear market and now coming down to it and retesting it at around approximately a penny could be very viable, especially if Bitcoin continues to go lower here. So we look here at the RSI, it's been going downwards, far more severe than the clear sideways price action has been so far. The MACD has been doing the same thing as well. They look here at the Bollinger Bands or the RVI. They are pretty highly converged right now, so far finding support along the median. So especially if Bitcoin does not continue to go lower here, I think there's definitely good reason for JASMY to continue towards the upside here as well. Still, as I mentioned in the last update, I really don't have too much to add for the potential areas towards the upside where it could find some short-term, medium-term resistance, some sideways cooling off action, and then continue higher throughout the rest of this bull market. But that wraps up everything that I wanted to go over in this video. So as always, hopefully you enjoyed. Again, none of this is meant to be financial advice. But everything being said, I hope you all have a wonderful day.